All right. So I'm just going to go over the trade we took today. It was a win. So it's nice to get one in the win column after some, a bit of a losing streak I've been on. But let's just go through this and my reasoning behind the trade. So, do we have to start on the weekly? No, I didn't really use the weekly to analyze my trade today. Use the daily time frame. I still am looking to see these equal highs get hit. Right? We talked about how we disrespected this fair value gap in the sense where this bearish fair value gap did not provide fair value. We closed above it. Actually used it yesterday as a inverse fair value gap, along with this daily fair value gap here that we use to push off of, and we're trending in the right direction towards this these highs here that I want to eventually see get hit. We'll probably see them get hit tomorrow, sometime around FOMC. I would imagine we're going to see, a big candle. I'm not saying that candle is going to close up here. I'm just saying most likely what we're going to see is at the very least a wick here at some point tomorrow. That is my guess because that's the heaviest news event we have this week. But again, this is where price is trending towards and what I wanted to see as like a higher time frame bias. Now, yesterday we swept liquidity. I was looking for this trade to take it higher up to these highs that we actually reached today. Yesterday, though, was a bit more choppy, and we ended up getting stopped out. Today, what I looked for was I wanted to see could price on the 1 hour, because realistically on the 4 hour, there's nothing else to really come for. We swept liquidity. So to the downside, there's not much there, right? So I went to the hourly. I said, okay, what could I look for price to trade down to first so I can get my higher time frame PD array that I need price to enter into for my model to exist, or for my model to develop inside of, right? So we had the 1 hour fair value gap here, and I also wanted to see like what liquidity could get swept to the downside, where I could then look to take price higher. And so again, traded into this 1 hour fair value gap, and then on the 15-minute, you can see the obvious liquidity that we were taking, right? These lows got swept, and my target was this high. Okay, now originally I was a little bit skeptical of this high because, well, as you can see, we wicked above already up top here, so we didn't have equal highs. The liquidity wasn't as obvious. But then I looked at ES, and ES was right underneath a large pool of liquidity right here, almost akin to what I'm looking for NASDAQ to eventually hit, right, during FOMC potentially tomorrow. So when I saw price was trading underneath that on ES, I said, okay, well then we're most likely, even though this NASDAQ high isn't the greatest as far as a liquidity pool because we already swept, we're going to come for it most likely because ES has to come for its liquidity pool. So there was a bit of like SMT going on there. And so after the sweep, right, I looked for an entry. And that entry was found here, okay? Got in off of this fair value gap right here. You can see, here, I'll get rid of this for a second. Right, you could see this fair value gap right here. Let's see if I can mark it out for you. It's also a bit of a liquidity void here too, so I'll count that as well. This right here is what we were getting it off of after a break of structure, right? We traded back into it. Technically on the 2-minute, you'll see we traded back into this fair value gap on the 2-minute. I entered off the 1-minute though, and price had a nice run after that. We disrespected some fair value gaps, right? And created inversion fair value gaps out of them. And then we kind of pooled up here, right? We started creating a pool of liquidity that we eventually ended up coming for. What I did was I had 4 contracts on. I took 3 contracts off right here at this high. and I put my stop to break even. My stop was right around here. Well, I'll show you. Let's get that back. Right, my stop was right around here. Okay. And yeah, you can see what happened, right? We took off 3 out of 4 contracts here. Price came, wicked my break-even stop loss, and then eventually came to my final TP. Now, what could have been done to maybe allow myself to get that final contract off at final take profit? Okay, I'm in no way upset with how I handled price today, how I handled this trade, how I managed it. I managed it according to my trading plan at the end of the day. So I'm in no way upset that I didn't take advantage of this last contract here. However, trying to learn from any trade I take. So right here, you'll see what I could have done. And, in hindsight, I don't even know if I would have been willing to, I like to secure profits when I can, right? I just do. I like to, it's the way I am. I'm a little less inclined to take on a lot of risk, right? That's why I always have my stop loss underneath the low instead of like something like this where actually would I have gotten stopped out today? Well, I would have never done this, but that's a crazy stop loss to have it under the fair value gap below there. But yeah, anyways, right? What I could have done was I could have moved my stop to here underneath this 5-minute fair value gap. Because if that gets disrespected, then fair enough. The trade is kind of, it's over. I get it. But until that happens, which we see, it never got disrespected before it hit my TP. I could have stayed in the trade that way. Now, again, I like the way I managed the trade. I don't know if I would change anything about today, to be completely honest with you, but that is just a way. In hindsight, I could have potentially gained that last contract onto the profit total today. But yeah, that's the trade. That's the reason I got in, right? Again, everything about my trading plan was in alignment today, right? I'll kind of read off my trading plan to you if you'd like. Look for next closest draw on liquidity, okay? Next closest draw on liquidity, right here, okay? That's what I was aiming for, right? Especially because of ES, next closest draw on liquidity. These highs, right? We were trading underneath them at that point. Okay, so that's next closest draw. Wait for sweep on opposing liquidity. Well, we saw that obviously, right? Sweep on opposing liquidity with this candle here. Wait for distribution in the direction of your draw on liquidity. Did we get distribution? Yes, we did. Distribution, broke structure, right? Enter off a fair value gap or inversion fair value gap after break a structure. Put the stop underneath the low. Entered off a fair value gap after breaking structure. Stop underneath the low. Awesome. Model has to be taking place inside of a higher time frame PD array. Well, I count the 1 hour as higher time frame if I am finding the model on a 15-minute or a 5-minute time frame. So here you go, right? Higher time frame PD array, the fair value gap there. That's where it took place. And then model must occur during 9:30 to 11:30 a.m. or 1:30 to 3:30 p.m. Well, this took place in that time quadrant there, right? So we are A-okay to take that trade every day out of the week. All right, so that was me. That was my trade today. That was me following my trading plan to a T. Successful day. Yesterday, another successful day. I know I lost the trade, but followed the trading plan. So, we've been trading good. We've been trading good recently. And, I'm looking forward to the rest of the week. I'm not going to trade AM session tomorrow. Potentially might trade after FOMC news gets released. We'll see. But we'll see. And then Thursday, Friday, another 2 tradable days there. So yeah, that was a trade. I'll just show you the actual. I'll show you the profit on it. Hang on. Um, 322 on the day. But yeah, again, you could see we've been on a bit of a losing streak, so it's nice to get that win today. Losing streak, although I've been following my trading plan, so it's been, you just got to have trust in your model over a longer period of time than a week or even a month, right? You want it to play out over a year span. So, but yeah.